Hey everyone, welcome back to the channel. Whether you're just starting out or you've been trading for a while, today's video is packed with practical advice to help you navigate the crypto world with confidence. I'm here to break down complex ideas and easy to understand tips, so you can invest smarter, not harder. Today we're diving into the three most common mistakes that beginners make in crypto and how to avoid them. Even experienced traders sometimes fall into these traps, so stick around. Mistake number 3 in particular could literally save your portfolio from disaster. Let's jump right in and make sure you're set up for success. Before we get into the specific mistakes, let's talk about why avoiding them is so important. The crypto market moves fast, and one wrong move can cost you a lot. But with the right knowledge, you can protect your investments and grow your portfolio over time. Remember, the goal isn't just to make quick money, it's to build lasting wealth and avoid unnecessary risks. So let's start with the first mistake that catches so many people off guard: FOMO buying. Mistake number 1 is FOMO buying, otherwise known as the fear of missing out. We've all felt it. You see a coin skyrocketing, everyone's talking about it, and you feel like you're missing your chance to get rich. So you jump in right at the top only to watch the price drop and your investment shrink. It's a painful lesson, but a common one. The truth is, smart money buys before the hype, not during it. By the time social media is buzzing, big investors are already cashing out. Let's talk about how you can avoid falling into this trap. Imagine scrolling through your feed and seeing everyone celebrate massive gains. It's tempting to jump in, but remember, by the time the crowd is excited, the opportunity is often gone. FOMO buying usually means buying high and selling low, which is the opposite of what you want. Instead, take a step back and analyze the situation calmly. Don't let emotions drive your decisions. Let's look at some practical ways to avoid FOMO buying. One of the best ways to avoid FOMO is to always check the chart history before making a move. Look for retracements and don't buy into a coin that's already pumped. Setting buy zones based on support levels can help you enter at a safer price. This way, you're not chasing the hype, you're making informed decisions based on data, not emotion. Let's talk about another powerful tool: dollar cost averaging. Dollar cost averaging, or DCA, is a strategy where you invest a fixed amount at regular intervals regardless of the price. This helps smooth out the impact of volatility and reduces the risk of buying at the top. Instead of trying to time the market perfectly, you build your position gradually. Over time, this can lead to better average entry prices and less stress. Remember, patience pays off in crypto. Here's a classic saying in crypto: buy the rumor, sell the news. When everyone is greedy and hyped up, that's usually a sign to be cautious. On the other hand, when everyone is fearful and prices are low, that's often when the best opportunities appear. Train yourself to think differently from the crowd. This mindset can help you avoid costly mistakes and spot real value. Now that we've covered FOMO buying, let's move on to another critical area: security. Many people overlook this, but ignoring security can lead to devastating losses. Let's dive into mistake number 2 and see how you can protect your crypto assets. Mistake number 2 is not securing your crypto properly. If your coins are sitting on an exchange, you don't truly own them. The saying goes, not your keys, not your coins. If the exchange gets hacked or freezes withdrawals, your funds can vanish overnight. We've seen this happen with big names like FTX and Celsius. Let's talk about how you can avoid becoming a victim. Leaving your crypto on an exchange might seem convenient, but it comes with serious risks. Exchanges are prime targets for hackers, and even the biggest platforms have suffered breaches. If withdrawals are frozen, you could lose access to your funds instantly. That's why it's crucial to take control of your assets and use secure storage methods. Let's look at the best ways to keep your crypto safe. For long-term storage, a hardware wallet like Ledger or Trezor is your best friend. These devices keep your private keys offline, making them nearly impossible to hack remotely. By storing your crypto on a hardware wallet, you take full ownership and control. It's a small investment that can save you from massive losses down the road. Let's talk about how to use exchanges safely for trading. When you do need to use an exchange for trading, always choose trusted platforms and enable two-factor authentication (2FA). This adds an extra layer of security to your account. Never reuse passwords and avoid sharing sensitive information. Remember, exchanges are for trading, not for storing your life savings. Let's move on to another crucial security tip: avoiding suspicious links. Phishing scams are everywhere in crypto. Never click on suspicious links or connect your wallet to unknown websites. Scammers often create fake sites that look real, hoping to steal your funds. Always double-check URLs and use bookmarks for important sites. If something feels off, trust your instincts and stay away. Next, let's talk about backing up your recovery phrase. Your recovery phrase is the key to your crypto. If you lose it, you lose access to your funds forever. Write it down and store it offline in a safe place. Never share it with anyone or store it digitally where it could be hacked. Taking this simple step can save you from disaster. Now let's talk about the difference between hot and cold wallets. Hot wallet is connected to the internet and is great for quick transactions, while a cold wallet is offline and best for long-term storage. Use a cold wallet for holding your main assets and a hot wallet for daily use. This way, even if your hot wallet is compromised, your main funds stay safe. Let's move on to the next big mistake: not having a strategy. Now that you know how to keep your crypto safe, let's talk about planning your trades. Many beginners jump in without a clear strategy, and that's where things can go wrong fast. Let's explore mistake number 3: trading without a plan. Mistake number 3 is not having a clear plan or exit strategy. Most beginners just buy and hope for the best, but without a plan, emotions take over. Fear and greed can quickly destroy your profits. The market is unpredictable, and if you don't know when to enter or exit, you're leaving your results up to chance. Let's see how you can fix this. Start by setting clear goals for your investments. Are you looking for short-term gains or long-term growth? Knowing your objectives helps you make better decisions and stick to your plan. Write down your goals and review them regularly. This simple step can keep you focused and prevent emotional decisions. Next, let's talk about defining your entry and exit points. Before you buy, decide on your entry point, take profit level and stop loss. This means you know exactly when to buy, when to sell for profit, and when to cut your losses. Setting these levels in advance takes the emotion out of trading and helps you stick to your plan even when the market gets volatile. Let's look at risk management next. Risk management is key to long-term success. Only risk 1–2% of your capital on any single trade. This way, even if a trade goes wrong, you won't lose too much. Over time, small losses are easier to recover from, while big losses can wipe you out. Stick to your risk limits and never chase losses. Let's talk about the value of keeping a trade journal. Trade journal is a powerful tool for learning and improvement. Record every trade you make, including your reasons for entering and exiting and the results. Over time, you'll spot patterns in your behavior and learn what works best for you. Reviewing your journal helps you avoid repeating mistakes and refine your strategy. Let's move on to some pro tips for trading smarter. One of the best ways to lock in gains is to take profits gradually. Don't try to time the exact top, sell a little as the price rises. This way, you secure profits and reduce risk. Overtrading can lead to mistakes, so sometimes the best move is to do nothing and let your plan play out. Patience is a powerful tool in crypto. Trading based on emotions is a recipe for disaster. Fear can make you sell too soon, while greed can make you hold too long. By sticking to your plan and using your journal, you can keep your emotions in check. Remember, discipline is what separates successful traders from the rest. Let's recap the 3 mistakes we've covered so far. Let's quickly recap the 3 big mistakes we've discussed. First, FOMO buying, chasing hype and buying at the top. Second, ignoring security, leaving your coins on exchanges and risking hacks. Third, trading without a plan, letting emotions control your decisions. By avoiding these, you're already ahead of most beginners and on your way to smarter investing. Avoiding these mistakes isn't just about protecting your money, it's about building good habits that will serve you for years to come. Crypto rewards patience, knowledge, and discipline, not luck. By focusing on learning and improving, you set yourself up for long-term success. Let's talk about how you can keep growing as a crypto investor. In crypto, patience is often your greatest asset. Markets move in cycles and quick profits can disappear just as fast. By taking your time, doing your research, and sticking to your plan, you give yourself the best chance to succeed. Remember, it's not about getting rich overnight, it's about building wealth over time. Let's look at some final tips to help you stay on track. The crypto world is always changing, so it's important to keep learning. Follow trusted sources, stay updated on market trends, and never stop asking questions. The more you know, the better decisions you'll make. Education is your best defense against mistakes and scams. Let's talk about the importance of community in your crypto journey. Being part of a community can help you stay motivated and informed. Share your experiences, learn from others, and support each other through the ups and downs. Whether it's online forums, social media groups, or local meetups, connecting with others can make your journey smoother and more enjoyable. Let's wrap up with a few words on staying safe and smart. Crypto is full of opportunities but also risks. Always double-check information, use secure methods, and trust your instincts. If something sounds too good to be true, it probably is. Protect your assets and your personal information at all times. Let's finish with a quick summary and some encouragement for your crypto journey. Here's a quick summary. Avoid FOMO buying by staying calm and doing your research. Secure your crypto with hardware wallets and safe practices. Always have a clear plan and stick to it. These simple steps can make a huge difference in your results. Remember, success in crypto is about consistency and discipline, not luck or shortcuts. Discipline is what separates winners from losers in crypto. Stick to your plan, manage your risk, and don't let emotions take over. Luck might help you once or twice, but discipline will help you win in the long run. Stay focused, keep learning, and trust the process. Let's talk about the importance of hodling strong. Hodling means holding onto your crypto through the ups and downs. It's about believing in your investments and not panicking during market swings. If you've done your research and have a solid plan, trust yourself and stay the course. Over time, hodlers often outperform those who try to time every move. Let's look at how to stay motivated on your journey. Crypto investing can be a roller coaster, but staying motivated is key. Celebrate your wins, learn from your losses, and keep your eyes on your long-term goals. Surround yourself with positive influences and remember why you started. Every step forward is progress, even if it's small. Let's wrap up with some final encouragement. You've taken the first step by learning about these common mistakes. Keep building your knowledge and refining your strategy. The crypto journey is full of challenges but also incredible opportunities. Stay patient, stay disciplined, and keep moving forward. You're already ahead of most beginners just by being here and learning. Always look for ways to improve your approach. Review your trades, update your strategies, and stay open to new ideas. The more you learn, the better your results will be. Crypto is a fast-moving space, and those who adapt are the ones who thrive. Let's finish with a reminder to stay safe and smart. Never compromise on security. Use strong passwords, enable two-factor authentication, and keep your recovery phrases offline. Double-check everything before making a move. Scams and hacks are common, but with the right precautions you can avoid them. Stay alert and protect your assets at all times. Developing smart habits is the foundation of successful investing. Plan your trades, manage your risk, and keep learning. The more disciplined you are, the more consistent your results will be. Remember, every great investor started as a beginner. Keep building your skills and stay committed to your goals. Everyone makes mistakes in crypto, even the pros. The key is to learn from them and not repeat them. Keep a journal, review your trades, and stay honest with yourself. Every mistake is a lesson that can make you a better investor. Embrace the learning process and keep moving forward. As you gain experience, your confidence will grow. Trust your research, stick to your plan, and don't let fear or hype sway you. Confidence comes from preparation and practice. The more you invest in your education, the more comfortable you'll feel making decisions. Let's finish with a look at the future of your crypto journey. The future of crypto is full of possibilities. By avoiding common mistakes and focusing on smart strategies, you're setting yourself up for long-term success. Stay curious, keep learning, and embrace the journey. The best is yet to come, and your efforts today will pay off tomorrow. Let's close with a reminder to stay strong and hodl on. No matter what the market does, remember to stay strong and stick to your plan. Hodling isn't always easy, but it's often the best way to ride out volatility and come out ahead. Trust your process, keep learning, and don't let short-term swings shake your confidence. You've got this. Thanks for joining me today. I hope these tips help you avoid common crypto mistakes and invest with more confidence. Remember, the journey is just as important as the destination. Stay safe, stay smart, and keep building your crypto knowledge. Until next time, happy investing and hodl strong. Every investor's journey is unique. Embrace your path, learn from every experience, and don't compare yourself to others. The most important thing is to keep moving forward and stay true to your goals. Crypto is a marathon, not a sprint. Keep going and you'll see results over time. Growth comes from continuous learning and adapting. Stay open to new ideas, update your strategies, and never stop improving. The crypto world is always evolving, and those who keep growing are the ones who succeed. Keep pushing yourself and you'll achieve your goals. To wrap up, remember, avoid FOMO, secure your assets, and always have a plan. These simple rules can make all the difference in your crypto journey. Stay disciplined, keep learning, and enjoy the ride. Thanks for watching, and I'll see you in the next video.